Hey everyone, it is Julie here with TipRanks. In today's video, we're taking a look at 3 trending stocks that the analyst consensus comes in as a strong buy and upside potential of over 40%. We're going to take a look at what it is these companies do and what's behind some of these recent analyst ratings. Just before we get into all of that, this is your friendly reminder that if you enjoy today's video, make sure you hit that thumbs up button and leave your thoughts in the comments down below. Don't forget to check out the description for links to our TipRanks mobile app for your Android or Apple device, where you can stay up to date with all of the latest analyst ratings and market news on the go. Please keep in mind that these videos are never a suggestion to buy or sell any specific stock and are just meant for information and entertainment purposes. Any investment decision does need to be made based on your own research and due diligence. All right, with that being said, let's get into it. As I said, these are trending stocks. So to find today's stocks, we went under research tools to our trending stocks, which will show you companies that have been recently rated by multiple analysts. So we're looking for the best rated stocks over this last week, and I looked between a medium and mega market cap, and it gave us our list here in which we picked a few that had some great looking upside potential. So the first trending stock that we're going to take a closer look at today is TuSimple Holdings. They trade under the ticker TSP and are currently priced at $38.65 per share. They just began trading on the public markets back in mid-April following their IPO, which we'll get into some of the details in a minute. At TuSimple, they developed the world's most advanced self-driving technologies specifically designed to meet the unique demands of heavy-duty trucks. Through the development of an industry-leading autonomous driving system, purpose-built autonomous trucks with OEMs Navistar and Traton, and the creation of the TuSimple Autonomous Freight Network, or AFN, they've become the partner of choice for shippers and carriers. Through their Autonomous Freight Network, or AFN, TuSimple is committed to bringing the most safe, fuel-efficient, and low-cost freight capacity to market, and they estimate about a $4 trillion global truck freight market, which is ripe for disruption. They say that currently in the freight market, there is a supply-demand imbalance. With an increased demand from e-commerce trends such as same or next day shipping, faced with a growing shortage of drivers and safety issues, with driver turnover normally exceeding over 100% and a driver shortage expected to worsen 2.6 times by 2028. Now, autonomous technology has been a growing trend this past year, and they believe that trucking autonomy will be a much faster adoption than autonomous cars. They say there are fewer corner cases, with trucking typically being focused on the highway, and no human in the vehicle. Cargo safety is a much easier topic than passenger safety. They also have the freedom to customize their network, actively avoiding school zones and other tricky traffic conditions. Currently, U.S. regulation is ahead of technology. There are 43 states that allow autonomous semi-truck testing and 24 states that allow autonomous semi-truck commercial deployment. You can see on the map in gray they have their current approved routes and near-term expansion plans into 2021 with those blue routes and future expansion plans highlighted in yellow. Now, TuSimple had their IPO on April 15th, offering over 33 million shares priced at $40 per share. This netted them about $1 billion in proceeds. Now, just yesterday on May 10th, they announced their first quarter earnings report. Highlights included increased reservations by 1,200 for a total of 5,775 by quarter end. Their reservation orders are from blue chip shippers, carriers, and truck lessors, including Penske, Schneider, and US Express. And they continued growth in real-world road miles with 3.7 million cumulative miles by their quarter end, and increased their issued patents 13% quarter over quarter to a total of 280. They generated about $1 million of revenue, accelerating revenue generation from paid freight loads. They also saw $183 million in new investments from Navistar and Traton, and that $1 billion from their IPO, putting their cash position pro forma in excess of $1.5 billion. Looking forward for the full year of 2021, they're expecting revenue of $5 to $7 million, R&D investment of $165 to $185 million, and expect to end 2021 with a cash position in excess of $1.3 billion. TuSimple Holdings currently has 10 analyst ratings, all which came in within the last few days following the quiet period after their IPO. And the stock comes in as a strong buy, with an average price target of $53 for about a 40% growth potential. Taking a look at our detailed list of analyst forecasts, our lowest price target is a hold with a downside of about 1.6%. The highest price target came in yesterday from 5-star analyst at Citigroup with a $75 price target, which would be a 94% upside potential. And that $75 price target came from analyst Christian Weatherby, who said that TuSimple currently holds the lead position in the race to autonomous trucking in the US, and with that position comes significant profit potential given the robust savings related to removing the driver. One other analyst covering the stock is Alexander Potter from Piper Sandler. The analyst says trucking is ripe for disruption by autonomous tech, and that TuSimple was among the first to acknowledge this. The second company on our list is another that just had their IPO back in April, and that is AppLovin. They trade under the ticker APP and are currently priced at $50.86 per share, down significantly from their IPO pricing of $80 per share back on April 15th. In fact, AppLovin has been one of the worst performing IPOs of its size. The company focuses on everything you need to grow your mobile apps. Their technology leverages machine learning and predictive algorithms to better match users to your app. They connect your apps with users on a massive global scale while crafting a personalized experience for them. Their programs include App Discovery, which enables more users to discover your app, Max, which supercharges revenue from your mobile apps, Jumpstart, which is their in-house creative studio, and Adjust, which helps you optimize your marketing campaigns. They operate in 15 offices globally and have developers leveraging their platform in over 125 countries. There are over 1.5 billion mobile devices reached per month, with over 420 million daily active users reached. AppLovin also had a flood of analyst ratings come in just yesterday following the quiet period after their IPO, and now has 9 analyst ratings in total. And the stock comes in as a strong buy based on 8 buy ratings and 1 hold. The average price target of $75 would be a 48% growth potential from the current price. And looking at those ratings, a lot of the analysts are in agreement. The lowest price target is the hold, but it's still a 25% growth potential. There are a lot of price targets coming in between the $70 to $80 price range, with the highest coming in at $95 for an 86% upside potential. That hold rating comes from analyst Scott Devitt from Stifel. He comments that AppLovin is well positioned to benefit from several global market trends, including substantial mobile app creation leading to new app developers and studios, a growing mobile gaming segment, and the growing demand for advertising technology. AppLovin possesses several positive attributes for an advertising technology and game publishing company: a large addressable market, a global opportunity, market-leading software technologies, and a proven founder-led management team. Another analyst covering the AppLovin stock is Jason Bazinet from Citigroup. He believes that AppLovin will grow free cash flow per share at 55% annually, faster than many peers, through 2023. This is driven by its unique collection of technical capabilities augmented by a broad portfolio of mobile games. Now, clearly, AppLovin has been on a downward trend since their IPO, but analysts seem quite bullish. Now, tomorrow, on May 12th, they will be releasing their first earnings report as a publicly traded company, so we'll see if that can change the winds here of the stock's momentum. And last, but certainly not least, we have QTWO Holdings, who, unlike the others, did not recently have an IPO in April. Trading under the ticker QTWO, they've been on the market for over 7 years and are currently priced at $93.25. QTWO Holdings provides cloud-based digital banking solutions that transform the ways in which traditional and emerging financial services providers engage with account holders and end users. They sell their solutions primarily to regional and community financial institutions, alternative finance and leasing companies, and financial technology companies. Their solutions enable their customers to deliver robust suites of digital banking, banking as a service, lending, and leasing services that enable end users to transact and engage anywhere, anytime, and on any device. Today, 1 out of 10 digital banking customers in America is using QTWO's single platform to bank. They begin with the traditional must-haves of digital banking: feature functionality, operational excellence, and integrations. They then add the next generation of must-haves: data-driven insights, open technology, and a unique approach to problem-solving called design thinking. Just yesterday, on May 10th, Q2 announced that they would be showcasing their new Bank-in-a-Box solution. They will be debuting this with Move-In at the Finovate Spring event. And this new Bank-in-a-Box solution can be deployed in financial institutions in as little as 30 days. Just last week, QTWO Holdings released their first quarter of 2021 earnings report. Their revenue came in for the first quarter at $116.5 million, which was up 26% year over year. Their GAAP gross margin came in at 45.7%, which was up from 42.5%, and their GAAP net loss for the first quarter was $25.7 million, compared to net losses of $34.1 million for the prior year quarter. Some first quarter highlights included signing a Tier 1 $8 billion bank to a digital banking contract, signing 2 Tier 1 customers, including a $10 billion bank to a digital acquisition and onboarding contract, and signing 2 enterprise customers, a top 25 and top 50 bank in the US, to loan pricing contracts. The Q2 Holdings stock currently has 13 analyst ratings, coming in as a strong buy based on 11 buys and 2 holds. The average price target is $140 per share, which would be an upside of over 50%. The lowest price target is a hold with a price target of $105, which would be a 12% upside potential, and our highest price target comes from Robert Baird with a $160 price target, which would be over 71% growth. So there are 3 stocks that have been trending with tons of fresh analyst ratings as of late, all with some pretty attractive upside potential. Of course, I always love hearing from you guys, so let me know in the comments down below what you think of these 3 stocks and what do you think actually has the best growth potential. Please keep in mind that these videos are never a suggestion to buy or sell any stock, and any investment decision needs to be made based on your own research and due diligence. Don't forget to stop in tomorrow morning for my pre-market morning update, where we're getting you ready with everything you need to know before the opening bell. If you enjoyed today's video, make sure you hit that thumbs up button and that you're subscribed to the channel as well. Thank you guys so much for watching, and we will see you back here next time.